Good morning, guys. Happy Friday. It's February 28th, 5:28 a.m. Central Time. Grain market's just a little bit higher this morning. Brian Split is here. Guys, let's start off with this USDA news that came out yesterday.
So the USDA is projecting an increase in corn acreage this season, while soybean acreage is slated to decline. The agency expects corn acres to reach 94 million, up 3.8% compared to last season. The anticipated rise in corn acres is attributed to corn's favorable prices compared to other crops. The season's crop is expected to be record large at 15.6 billion bushels. Soybean acres are estimated at 84 million, down 3.6% from last season. Farmers are slated to produce the fourth largest soybean crop on record, totaling 4.4 billion bushels. Wheat acres are pegged at 47 million, up 2% compared to last season.
All right, Brian, 94 million acres of corn, fair or foul?
I think it's fair. I think the trade thinks it could actually be higher than that. We'll see what happens at the end of March. But, again, we look at the yield portion of it, and with a trend line yield, which is a yield we haven't actually ever produced in real world scenarios, we're looking at still almost a 2 billion bushel carryout. So I still think there's, quite a bit of opportunity down the road for a conversation on new crop where things are still going to potentially look friendly.
This may be an agronomic argument, which I don't know anything about, but it would appear to me, looking at these charts, corn yield, soybean yield, it would appear to me as if the trend has kind of flatlined the last, I don't know, 6 or 7 years. I mean, again, we're starting with yields that we've never actually achieved in real life.
Yeah, and that's for soybeans as well. A 52.5 is a very healthy number.
Yeah.
And that gave us what, a 320 million bushel type of a carryout number. The one part of this balance sheet that no one really dives into is the demand, and you can argue that, and whether exports are going to be as strong as what's used on these balance sheets, right? Will Mexico be as strong of a buyer of the next crop as they were of the previous crop and the crop before that? We don't know that. But I still think that in the big picture, there's going to be a conversation down the road, whether it's in May or June, what have you, where we price in, at least for a period of time, what things look like with a subtrend yield. And I think that's going to be our marketing opportunity down the road.
Let's go back to the acres. So corn is gaining a whole bunch of acres, mainly at the expense of soybeans. I thought the wheat number was interesting. USDA mentioned something about spring wheat here. They said combined spring and durum wheat plantings are projected higher than last year, with more area available in the northern plains, with an expected reduction in soybean plantings, although higher expected net returns for corn could limit this increase. I am maybe slightly skeptical about higher spring wheat acres. You guys up in North Dakota, wherever, you can drop us a YouTube comment and tell me why I'm wrong. But just of all the crops listed here, man, you got corn, beans, sorghum, wheat, cotton, rice. Corn's the only one that has any sort of margin associated with it. And even a lot of farmers planting corn are still eyeing negative margins, just not as bad as the alternatives. So I kind of think I think 94 might be low personally.
Yeah, I agree with your wheat assessment. We have a branch office up in Almont, North Dakota, and I think sentiment there would be similar to what you just said, that we're probably more likely to see corn acres up there, additional corn acres than additional spring wheat acres. I think another interesting point, and this was pointed out by a client in Arkansas on the cotton side of things, the acreage is down. Yet where that acreage is down is where you're going to typically see more abandonment. So the abandonment figures were dropped substantially, where actually a reduction in acres gives us an increase in production because of a big reduction in abandonment. So that was something I think was interesting to see. And cotton has not reacted favorably to that at all.
No, the cotton number, I mean, that 9.9 is really low. I mean, lowest since I don't know when, but 9.9 is really low. I can't help but wonder if it'd be lower than that, though. I mean, cotton prices are at like pre-COVID type levels, aren't they?
Yeah, I mean, below 70 on new crop is not a good look for producers. Looking at planting cotton this year, I think at some point it'll turn into a bull market on again, the idea of once the acres are not planted, you can't put them in, and then we're going to have some type of a weather story at some point to price in a reduction in yield. But Overall, it's funny. I mean, it's like the market sold off pretty aggressively yesterday in corn, and there was buying of beans. So there was almost an instant unwind of the bean versus corn trade. What it looked like from these outlook forum numbers, and then we had the kind of the tariff talk come in later in the day. But it's like the market never thought about the idea of corn acres being up and bean acres being down.
Yeah, I don't know. It seemed to me like just a continuation of the correction that we've seen in the corn market as of late. And I guess maybe the high acreage number spurred that. You mentioned a potential summer weather issue or crop scare event a couple different times in our brief chat so far this morning.
Mm-hmm.
And people have talked about 2025 summer drought a lot. There's been a lot of talk about it. I think one thing that some people get wrong though is that they think of drought as like this binary event. Like there's going to be drought or no drought. When in reality, most years, what you'll see is a crop scare event where it looks like there could be a drought for a minute. And as you mentioned, that is typically when you see your marketing opportunity, when you get a week or two of a dry forecast in May or June or early July. Like that's typically when the marketing opportunity happens. To see something like a 2012 where it just doesn't rain all summer, that's an anomaly. That's exceptional. What's much more normal is to see a crop scare event rather than like a crop failure, full-blown drought event.
Correct. And on the weather front and why people are talking about the possibility of drought, we at our conference in Nashville had Eric Snodgrass there talking about weather, and he laid out 3 different things that were concerning to him about, why we could see a higher correlation to drought this summer. So, it's February, we're almost in March, and there's still a lot of time. But I do think that there will be, a pretty aggressive conversation down the road. And it seems like really we need to be thinking about what the water temperatures are off the coast of what Baja, Mexico is going to be one of the major components. Obviously, how the current drought levels evolve over the next couple of months is going to be another part of that conversation. And then looking at the jet stream flows. I thought it was really interesting. He said that that northwest flow is there this year, but the jet stream that would typically come from like Southern California and move east is completely absent this year. So those are kind of the 3 things that he was watching that he'll continue to update us on over the next couple months and see how that evolves as far as his thoughts on drought potential this summer.
Let's shift gears and do tariff talk.
President Trump will impose an additional tariff on China and move forward with his proposed tariffs on Canada and Mexico. On Thursday, Trump announced an additional 10% tariff on China, claiming that the country has not done enough to stop the flow of fentanyl into the U.S. It was reported earlier this week that Beijing is developing a proposal to negotiate with the U.S. that includes the reinstatement of the Phase 1 trade deal. Trump also announced that the 25% tariffs on Canadian and Mexican imports will go into effect on March 4th. Additionally, yesterday, after meeting with the British Prime Minister, Trump stated that the US and UK are working on a trade agreement.
I saw it written in many places yesterday, Brian, that this was actually the bigger story with regard to the corn sell-off. And I don't know if I necessarily buy that, but it's certainly not positive.
No, I think there was kind of some miscommunication this week. Wednesday, there was a comment from President Trump about looking at April 2nd for tariffs. And then yesterday, it was, all right, April 2nd is more for the reciprocal tariffs, and March 4th is still the date for Mexico, Canada, and then this new 10% on China. So I agree. I think yesterday it kind of started with a little bit of unwind of corn versus beans. Beans were higher earlier in the morning. Corn was a little bit lower. And then as this tariff talk kind of accelerated through the course of the day, then everything found some additional pressure.
China did respond overnight. They accused the U.S. of fentanyl blackmail, but they stopped short of any big like retaliation action or talk. And Mexico hasn't really said much about retaliation either. As we've mentioned many times, the last thing we want to hear is Mexico talk about corn with regard to retaliation because they've been such a big buyer. That's as it relates to our crowd. China's still buying soybeans out of the U.S. I mean, it's going to be drastically reduced as it usually is seasonally. But I think for corn, people thought this was a big negative headline yesterday. We've got some biofuel news.
Southwest Airlines is scaling back its commitment to sustainable aviation fuel usage. The airline has laid off key employees responsible for reducing climate pollution and expanding the use of SAF. Southwest is also terminating a newly formed team dedicated to investing in renewable fuel startups. Additionally, the airline is selling a startup focused on developing cleaner fuels from corn husks and stalks. Southwest has committed to using SAF for 10% of its jet fuel by 2030. However, SAF represents less than 0.1% of the airline's total jet fuel consumption. Airlines worldwide used about 0.3% of SAF last year.
This was a well-written article, but I read it a couple of times and it doesn't mention the why. Like, why is this happening? It's happening because lack of biofuel guidance from the government. And it goes back to 45Z and just the lack of any concrete policy from the government. We've seen other companies do similar things. Amazon announced a bunch of layoffs in its sustainability units, and other companies have followed suit. So Brian, are people it looks like everybody's starting to kind of sour on this, or just they're sick of waiting.
Yeah, how can you not? I mean, how can you invest money in something where you're not sure? I mean, it was put into law, but there's no guidance about it. So, when you think about all of the talk, I mean, you could go back to 2023, right? Into like winter to spring of 2023, people were getting excited about soybean oil, what that meant for renewable diesel, sustainable aviation fuel. You did a lot of good work with Peter Meyer, really trying to stay in front of like, what does this all mean? What kind of extra demand can we see? And then to your point, you've got complete and total lack of guidance. So how do you invest money in that space right now? How do you try to move forward with that when there's really no guidance as to what type of levels and incentives we're going to be really dealing with?
You can't not until you know firmly what the policy is going to be. We had Jim Urio on last Friday, and he was talking about Trump's comment or phrase that he's used frequently, the green new scam, right? And Jim's thought, and I think this is interesting. He said when Trump says the green new scam, he's not talking about biofuels or sustainable stuff necessarily. What he's talking about is like the blank checks that went out to these no-name companies in the name of climate and things along those lines, and that there was fraud and abuse in the system, and that was the scam, not necessarily that this push toward biofuels or sustainable stuff is the scam. He doesn't like some of it. Like he said, we're not going to build any more windmills. Okay, I understand that. These airlines want to do sustainable aviation fuel. They need a nudge from the government, I think. And we could definitely use the extra demand, right? I mean, that's something we hear about from our subscribers all the time. We need more demand. And this appears to be, to me, the way to get it.
Yeah, a couple months ago when we were talking about potential additional direct payments to producers, and that was the general sentiment is, all right, if we're going to spend billions of dollars, we would rather it not go directly into our pockets. We would rather those dollars be invested into something long-term to spur long-term demand. And so hopefully this guidance, I mean, there's an awful lot going on with the administration right now. Yes, they are trying to cut the spending that is out of control and that is, not being watched as far as who's getting what and why. So I think that's part of their priority to start. And then hopefully as they cut some of that fat and trim that, then we can start looking at, getting some guidance on these other policies, but it's not going to come as fast as the market wants it, I don't think.
No. Okay. We talked about drought a little bit earlier. Let's get into the drought monitor.
So the Corn Belt was mostly dry last week, leading to the expansion of drought conditions across a large portion of the area. Roughly 40% of the area is experiencing some level of drought. Notably, the percentage of U.S. corn areas affected by drought rose by 11% in the past week, while soybean areas saw a 10% increase. The high plains were also dry. Drought conditions expanded across the southern half of Kansas and the western region of Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country, 56%, soybeans, 46%, winter wheat, 22%, spring wheat, 39%, and cattle country, 36%.
I know the markets are concerned about this, but I think farmers, especially in the Western Corn Belt, probably are concerned. Drought conditions are worsening. I'm looking at the forecast. Any sort of rain you're going to see here whether it's the 7-day or even through the 16-day, it's all going to be confined to the central and eastern corn belt. And what I've been told, Brian, is that this corn acreage expansion is going to be more of a western corn belt thing than an eastern corn belt thing. Not to say it won't happen in the east, but more of a western corn belt thing. So I think it's late February. We got to start paying attention, right?
Yeah, again, I'll bring Eric Snodgrass back in kind of his comments, but his forecast has the eastern belt remaining wet
Mhm.
and likely remaining wet into planting. So if there's any type of mudding the crop in, any type of potential planting delays, it is likely going to be the eastern belt. And then the other thing that is concerning, again, is the ongoing dryness in the western belt. But then particularly when you look at the south and you look at that dark red that is forming, you've got it in the western portion of Texas there, and it goes all the way into the southern part of California, Nevada, right? And that is the dryness that he's really going to be watching, because that over the next couple months, if that starts to creep north and east, then that is showing similar tendencies to 2012, right? That's where the drought built in 2012, was in the southwest, and then it just moved north and expanded. So that's going to be the evolution that the trade's going to be watching for, is that drought that's and what we can't see is Mexico. So if that map went further south into Mexico, you would just see that dark red is a lot bigger as you shift further south. So this map doesn't show it, just it's a map of the United States, but that drought started in Mexico and it has been moving north.
All right, let's get to export sales.
U.S. corn export sales were disappointing last week. Net corn sales fell below pre-report expectations at 31 million bushels. The print was down 45% compared to the previous week and 47% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales were reported at 15 million bushels. The print was down 14% from the previous week, but up 10% from the prior 4-week average. China was the largest soybean buyer for the week. Net wheat sales fell below expectations at 10 million bushels. The print was down 50% from the previous week and 46% from the prior 4-week average. Taiwan was the largest wheat buyer for the week.
Soybean sales are supposed to decline this time of year. This is totally normal. 411,000 actually ain't too bad for old crop. Brian, are you concerned that corn sales backed off for a week?
Prices got a little high. That might be part of it. We went back and revisited our spring highs, and that should be a major resistance area that we pull back from, which we're currently doing. And I think we need to find some support where buyers want to come back and show some more interest. At least Mexico was the main buyer still, so they're still the one that is coming in for corn. I know there's a conversation about whether Mexico was front loading, and I don't think we'll really truly know about how aggressive Mexico is buying until tariffs do come into effect, and then we see what their behavior is afterwards. But I think it's still a very plausible idea that Mexico is trying to get as much corn bought as they can before tariffs come into place. But they needed to buy corn anyway, and they would have bought a lot of corn because, again, when we talked about the drought and the expansion of drought, Mexico had a really bad drought in their previous growing season, and they had a poor corn production because of it. So they needed a lot of U.S. corn. Is that buying being exacerbated because of potential tariffs? We'll see. But a lot of the commentary about, well, this is not front-end loading, we really don't know until we see China's or Mexico's behavior post-tariff. And whether these tariffs actually get levied or not. But I want to see corn sales above 1 million tons a week. It was less than that. Hopefully that does not become a trend.
Mexico, just to be clear, Mexico does not have to retaliate and tariff U.S. corn. They could retaliate in other ways. It's up to them if they want to tariff U.S. corn imports. And if it doesn't make sense for them to do it, then they won't do it. But it's definitely a risk considering how much they've bought, I think. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 30 cents to $1.50 higher, and feeders saw gains ranging from 202 to 215. Box beef was lower. Select was down 111 at 302.13, and choice was down 172 at 311.18.
Awfully strong again, Brian. What do you think?
So I think the livestock has a lot of tariff influence.
Yeah.
Feeders come in from Mexico. So that has been very strong on the feeder front. We've seen a lot of buying there because of that chatter. And then you look at the exact opposite of that. There's a lot of pork that goes to Mexico. And with the tariff on talk yesterday, hogs were trading limit down in April for a period of time and bounced ever so slightly into the close. But it definitely appears like the livestock markets are trading the tariff talk aggressively.
Outside markets are mixed this morning, but we have seen kind of like, I would call it a risk off type trade in a lot of your risk assets. You look at stocks have corrected, gold's corrected. You look at
Bitcoin.
market like Bitcoin's corrected sharply. What do you make of that?
There is definitely type of a risk off type of trade. There's been a lot of money flowing into gold. We've seen some days where gold has been up $40-50, sometimes multiple days in a row. We're starting to see that trade week where now we're below the 10 and 20-day moving averages. So it's starting to show signs of maybe some liquidation of this recent link that was done. It seems like just as we go into the tariff talk, there's a lot more, let's just maybe get to cash and reduce our position size across the whole spectrum.
Yeah, feels like that to me. Everybody have a wonderful weekend. Brian, thanks for joining us. We will be back on Monday.